Tired of your car insurance rate going up even with a clean driving record? You're not alone. That's why there's Jerry, your proactive insurance assistant. Jerry compares rates side by side from over 50 top insurers and helps you switch with ease. Jerry even tracks market rates and alerts you when it's best to shop. No spam calls, no hidden fees. Drivers who save with Jerry could save over $1,300 a year. Switch with confidence, download the Jerry app, or visit jerry.ai/ACAST today.
Good day, everyone. My name is Layla, and I will be your conference operator today. At this time, I would like to welcome you to the Ford Motor Company second quarter 2025 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, and if you have joined via the webinar, please use the raise hand icon, which can be found at the bottom of your webinar application. If you have joined by phone, please dial *9 on your keypad to raise your hand. At this time, I would like to turn the call over to Lynn Antipis Tyson, Executive Director of Investor Relations.
Thank you, Layla. We'll be referencing non-GAAP measures today. These are reconciled to the most comparable U.S. GAAP measures in the appendix of our earnings deck. You can find the deck at shareholder.ford.com. Our discussion also includes forward-looking statements. Our actual results may differ. The most significant risk factors are included on page 20 of our deck. Unless otherwise noted, all comparisons are year over year. Company EBIT, EPS, and free cash flow are on an adjusted basis. Now I'll turn the call over.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host, and I've got some echo. Let's see if I can get rid of that. There we go. Echo's gone. That's good. All right. A little disorienting. Today, we are going to finally cover Ford's Q2 2025 earnings call. Before we get to that, though, first, a lot of great feedback about the last couple of episodes, constructive feedback as well as just like, hey, I like the pacing of the show and all that kind of stuff. So that's all great. And thank you all very much for the kind words. Even the constructive feedback, I really do appreciate. And actually, maybe this is a sick thing, but I typically appreciate the more constructive, like honest feedback more than than some of the other stuff that's like, hey, you're doing a great job. Although I do like the, hey, you're doing a great job. But as a firefighter, you should know that we practiced extreme honesty, even when that means we have to lie a little bit to be mean. What I'm saying is we're really mean to each other. So when somebody's nice to me, I genuinely feel very uncomfortable. So yeah, that's something that I should probably bring up in therapy at some point. Step 1, go to therapy. Step 2, bring that point up. I've been to therapy in the past. It's not that bad. You should go if you need it. Anyway, not what we're supposed to talk about today. I do want to let you know that Joseph sent a message in when I was talking about the issue that some of the Tesla owners were having with the service centers. He had a really good recommendation. He said, try another service center if you disagree with what the first service center is telling you, which I think is good advice for any different, any car manufacturer. There are lots of different dealers out there. There's only one Tesla, right? So you got to if you're going to go to a service center, it's still going to be owned by Tesla, and that person can still look at your notes, but they might have a different perspective on the matter. So it's definitely worth trying, especially when it's, like in the case of the lady who had the battery seal problem, a $30,000 issue. But for sure, and hopefully Tesla and some of these other organizations will kind of figure this out and have a better way of escalating up if you disagree with the diagnosis or if you disagree with the decision that the service center is making. And then in yesterday's show, the first thing I talked about was in Tuesday's show. In yesterday's show, I talked about how I thought that Ford had a Model T pickup truck, but I couldn't find it anywhere. Joseph also very helpfully pointed out that was called the Ford Model TT. So if you are looking for a the Ford Model T pickup truck, just type in Model T and then T like Tom Tom, and it comes right up. And again, I love the way the Model T looked, and the truck looks just as good. But I do think that even though everybody thinks that Henry Ford is such a great businessman and a visionary, I think he missed out on some of the names that he could have called the Model TT. Instead of the Model TT, he could have called it the Model T Plus, the Model T Max, the Model T Premium, possibly the Model T with ads. These are just my suggestions. I don't think, based on this glaring oversight, Henry Ford was quite the pioneer that people thought he was, just basically because of his terrible naming conventions on the Model TT. Like who doesn't want to drive a Model T with ads and that comes with 3 different oil lamps? Who doesn't want to do that? I don't know anybody who doesn't. All right, let's let's jump into the Ford earnings call. I realized just right now that diatribe at the beginning there besmirches the company that we're going to talk about. Let's start with Jim Farley's opening remarks. There was like 4 or 5 people who gave different opening remarks for this earnings call, which honestly you love to see, because typically they'll do an earnings call, a company, not just Ford, they'll do an earnings call and you'll hear from the CEO and then the CFO, and then they'll do like retail investor questions, or they'll move on to the analyst questions. But in this case, they did, like I said, 4 or 5 different opening remarks. And honestly, most of them were pretty businessy, financial stuff, not really exciting for this particular program. So I didn't include a lot of that. Speaking of not including things, I edited this earnings call in a way that made sense for this podcast. So you're only going to hear certain clips in some cases. If you want to hear the whole thing, I'll put a link in the show notes. While I did edit it, I did try to maintain the spirit of what the people, the representatives from Ford were trying to say. But just like anything else, if you want the full story, you should go directly to the source. And that's why I put a link to the earnings calls in each show notes. All right, here's some important things that I wrote down but did not include in the earnings call. First, Ford had $50 billion in revenue in Q2 2025. Sorry, I'm still thinking of the Model TT. $50 billion in revenue in Q2 2025. They also had some improvements when it comes to different costs, and that excluded tariffs. The Model E margin improved, but it's still losing money. The Model E is their electric side of the business. They spoke a little bit about the Model T moment on August 11th. I didn't include a lot of those clips because I don't think it was super relevant. We've already covered it. They're very optimistic about Ford Pro, particularly about the services revenue that they're getting. And then I didn't know this. I didn't know part of this. Volkswagen is building a truck based on Ford's platform. I did know that. But they're also building a transporter van based on Ford's platform. And this van is not the ID Buzz. It's completely different. And this transporter van will be a commercial and passenger van. So I didn't know that. All right, let's get to Jim's opening remarks.
As America's largest automotive producer and the best-selling brand in the U.S. in the first half of this year, we support a level playing field globally. We value our ongoing cooperation with the administration on trade policy and CO2 emission standards. We expect tariffs to be a net headwind of about $2 billion this year, and we'll continue to monitor the developments closely and engage with policymakers to ensure U.S. auto workers and customers are not disadvantaged by policy change. We've been working hard with the administration. We believe our cycle plan is right for this tariff environment for the coming years. The latest round of tariff policies, especially the deals in Japan and Europe and potentially South Korea, makes our strategy even more compelling at Ford. Our bet is not to compete in high-volume generic segments that typically require overseas production, for cost competitiveness. Instead, we are doubling down on what we do best: trucks, iconic passion products, Ford Bro, and breakthrough technology that you will soon see on our forthcoming EV platform.
As you could imagine, one of the things that they really hit hard, the analysts anyway, hit hard on was the impact of tariffs. And a little bit of that because right now, tariffs between the US and China seem to be maybe that negotiation seems to be going a little better than tariffs between the US and, let's say, Mexico, where Ford gets a lot of its parts from. So we're going to hear a little bit of that throughout the earnings call. Let's go ahead and jump into our next clip.
We also sold more electrified vehicles than our two main domestic rivals combined, with EVs and hybrids at close to 14% of our U.S. mix.
So I only added that in because I think that's misleading. When they say electrified vehicles, and he does say it in there, but he's saying hybrids and EVs. And what I think he would like news outlets to do is seize on Ford sold more electric vehicles than their top two competitors combined. Because to me, that really seems like Ford is writing its own headline instead of actually providing information. Like, it's great that they sold more hybrids and EVs than their top two competitors combined, and I'm guessing that Stellantis and GM is their top two competitors because they didn't sell more EVs than Tesla. But the GM is the number 2 EV seller here in the US, so that is definitely not 100% true. It's just misleading, I should say. All right, moving on to our next clip, which is about tariffs.
We will now move to our question and answer session. If you have joined via the webinar, please use the raise hand icon, which can be found at the bottom of your webinar application. If you have joined by phone, please dial *9 on your keypad to raise your hand. When you are called on, please unmute your line and ask your question. We will now pause a moment to assemble the queue.
Does anybody else think that this person isn't a person and is an AI voice? Because, man, every time I heard her speak, I'm like, this doesn't seem like a real life person. She might be a very well accomplished voice actor, but it sounds really AI-ish to me. Even though there's breath sounds in there, it still sounds like it's coming from AI. All right, now let's get to the clip.
Our first question comes from Emmanuel Rosner with Wolfe Research. Please unmute and ask your question.
Great. Thank you so much. First question was hoping you could give us a little more color on the drivers of guidance change and improvement in particular. You're obviously absorbing larger tariffs, $2 billion of tariffs that were not in the initial guidance. And so what are the drivers by bucket of improvement versus your previous outlook? And if at all possible, I'm curious about the EBIT, but also the free cash flow.
Sure. So let me just first by commenting on the guidance. So our net tariff was estimated at $2 billion, and our guidance came down $1 billion. So our guidance illustrates the strong improvement in our business. We also kept our free cash flow the same versus the outset of the year at $3.5 billion to $4.5 billion. And the $9 billion for CapEx is approximately the high end of our prior guidance. The guidance is underpinned by the strong performance in the business, which is primarily in the cost area. And as you know, we have a target of $1 billion of net improvement on a year-over-year basis. We're making terrific progress on that, as you're seeing in our numbers. And we're really focused on sustainable improvement in warranty and material cost that will make its way into 2026 and beyond. And currently, we have a very fulsome pipeline of opportunities to support that.
Okay. I appreciate that. So this is mostly because that was already your target, this cost improvement, 1 billion ex tariff. So are you targeting a larger number now? I'm just generally trying to understand, why sort of like the underlying performance better. I guess where do you expect that underlying performance better to materialize on a full year basis?
We've seen it in manufacturing efficiency and our negotiated cost for parts. Those are two areas where we've accelerated past our own targets. There have been some ins and outs on the $1 billion, but those are the real strong parts of the business that we see. And also, obviously, the market equation for Pro is very strong.
Whenever they mention Pro, I'm always assuming that they're talking about their services side of Pro. Now, I could be wrong on that, but they hit that very heavily in the earnings call, just in general, about how services is kind of a growth, an opportunity for growth in the future. So, and you don't have to import anything if you're selling a service like Blue Cruise or, you know, connected data or connected vehicles, that kind of thing. So, or fleet management, which we're going to hear about here in a little bit. So it looked like they were going to pay $3 billion in tariffs at the beginning of the year, or projected to pay. And because they were able to kind of retool some things, maybe shift some suppliers around and renegotiate some deals and come up with better ways to build these cars, they're able to knock off $1 billion of that $3 billion and knock it down to $2 billion. I can't remember if he says anything in the clip, but they also talk about regulatory credits because the EPA had some revisions, let's say, especially when it came to penalties regarding automakers. And, if they did not meet certain targets, then they had to pay X amount of fines. And then these automakers like Ford, GM, Stellantis, they were buying regulatory credits to zero emissions vehicle credits to offset so they didn't have to pay these fines. Well, those fines are now effectively set at zero. Like the rules are still in place as far as I know, but the fines there's no fines attached to those. So if you don't meet the regulation, there's no penalty for that. So they're going to save about $1 billion, it looks like, in those regulatory credits. All right, now let's move to our next clip, which is regarding the regulatory credits and how that's going to, regarding the regulations and how that's going to affect the EV business.
Okay, understood. And then separately, Jim, I was curious on the back of some of the recent changes in U.S. regulations and a more relaxed environment. Curious about Ford's appetite to potentially be more strategic about some of the spending on the EV side, and whether there's actually room to potentially cut this back in any sort of material amounts in the future once you get a chance to essentially assess the impact of these softer regulations.
Well, you're absolutely right. The EPA's decision and their posture has really changed a lot in the U.S. And being number two to Tesla and EVs, we've learned a lot the last 3 years, and having a full range of truck hybrids, we've learned a lot. And there's no doubt about it that we've had to change our EV spending and capital allocation pretty large, pretty massively. You and a lot of investors hopefully will get a chance to come to Kentucky, and you're going to see the future of our EV platform shift from where our first generation products are to now. We've definitely moved out launches. We've canceled some products. We've made the right choices in terms of battery chemistry change, like LFP in Michigan. I think we're very well positioned for the reality of the EV market with the customers today. I'm equally excited about the changes we're making on our powertrain choice. We're kind of moving from being the dominant player in truck hybrids in the U.S. to offering EREVs, PHEVs, and a full range of hybrids across our lineup, especially our bigger vehicles. We think that's a much better move than a $60,000 to $70,000 all electric crossover. We think that that's really what customers are going to want long term, and we're investing a lot in more durable ICE powertrains. The good news is that we've always built our business around flexibility of the powertrain. So our manufacturing operations can adjust to these. And a lot of the EV spending that's come down has been reallocated to Pro, including Pro services. I think that's going to be great for our investors and great for the employees. We think the rulemaking will be finalized by December, and in the short term, we've already made mix changes. We've descaled our credits, our CO2 credits, by $1.5 billion already. There may be more opportunities on the mix side for next year, as you said, as we fully evaluate these opportunities. Not much is happening in Europe and the rest of the world. This is really just a big shift in the U.S. and a big opportunity for Ford.
I would imagine that the EPA reducing those fines down and some of the regulations is a big win for all automakers that build internal combustion engines. On a business side, and I've said this before in the past, that it gives the automakers that do have hybrids and internal combustion only engines, cars, it gives them the opportunity to build what's going to make them the most amount of money. Tesla, Rivian, Grifter, Lucid. That wasn't even a Freudian slip. I don't think so. I don't think Grifter Motors. That is something that I'll have to think about. I don't know why I said that for Lucid. Maybe I was thinking of the Gravity. But let's start over. Lucid, Rivian, and Tesla. If electric vehicle sales in the U.S. go south, they don't have anything else to kind of back that up. They sell only an electric vehicle. Now, I happen to think that's the right way to go for a lot of different reasons. However, people are going to do what's right by their pocketbook, and legacy automakers are better equipped to deal with that. So to meet that demand, I should say. Whereas if the world, every consumer in the world wanted an electric vehicle, then Lucid, not Grifter, Lucid, Rivian, and Tesla, they're in a better position for that. So we'll see how it goes.
And now, a next-level moment from AT&T Business. Say you've sent out a gigantic shipment of pillows, and they need to be there in time for International Sleep Day. You've got AT&T 5G, so you're fully confident. But the vendor isn't responding, and International Sleep Day is tomorrow. Luckily, AT&T 5G lets you deal with any issues with ease, so the pillows will get delivered and everyone can sleep soundly, especially you. AT&T 5G requires a compatible plan and device. Coverage not available everywhere. Learn more at att.com/5G network.
Tired of your car insurance rate going up even with a clean driving record? You're not alone. That's why there's Jerry, your proactive insurance assistant. Jerry compares rates side by side from over 50 top insurers and helps you switch with ease. Jerry even tracks market rates and alerts you when it's best to shop. No spam calls, no hidden fees. Drivers who save with Jerry could save over $1,300 a year. Switch with confidence, download the Jerry app, or visit jerry.ai/ACAST today.
All right, let's go ahead and move on to our next clip.
As a reminder, please limit yourself to one question and one follow-up today. Our next question will come from Mark Delaney with Goldman Sachs. Please go ahead.
Yes, thank you very much for taking the question. I also had a question around the changing emissions policy environment. I'm hoping you can better help investors better understand how Ford is balancing the opportunity to see improved mix and lower costs as a result of the changing emission policies in the U.S., while also remaining competitive with your EV technology, including relative to the Chinese domestic OEMs that are increasingly selling their vehicles on a more global basis.
Thanks. Yeah, we're already reducing our credit buys. We are changing our mix towards the fourth quarter this year, and we see a pretty big opportunity next year. As I said, multi-billion-dollar opportunity over the next couple of years. On the EV side, I'm really excited to show everyone, where we're going on our EV. We've been busy the last 3 years, kind of in behind the curtain. No one could really see how we're allocating our capital and what our new EV strategy. We are out of sync in a good way with our competitors who are now fully loaded with all their EVs, and they'll have to commit to them for a full cycle of product. Ours is coming out, in the next year or two, starting. So you're going to see a lot of news from Ford on our EVs, and our strategy is very simple. We believe the only way to really compete effectively with the Chinese over the globe on EVs is to go and really push ourselves to radically re-engineer and transform our engineering, supply chain, and manufacturing process. And that will come to life soon. And I'm excited to show everyone. This is a Model T moment for the company, as I said, and that will become clear for us. We really see not the global OEMs as the competitive set for our next generation of EVs. We see the Chinese companies like Geely and BYD, and that's how we built our vehicle, how we've engineered, what kind of supply chain we've used, and the kind of low content in our manufacturing. And a key part of that is our LFP battery built in Marshall, Michigan. And it's a big advantage for the company. We're the first one to build it at scale. It also has the PTC. We're thankful that Congress upheld that. That's a key part of our profitability roadmap to transition in these lower cost batteries.
So while the federal tax credit for consumers is going away, there still remains a tax credit for manufacturers who are building EV batteries in the US, as long as it meets, certain criteria when it comes to the battery components and the critical minerals and that kind of thing. But the PTC, that's just production tax credit. In terms of the other things that he talked about, being out of sync with competitors, which is a good thing. Yeah, kinda. I mean, Nintendo is out of sync with Xbox and PlayStation when it comes to releasing consoles. I'm not sure it's the same kind of thing for auto manufacturers. It can certainly be an advantage. However, it could also be a disadvantage because at this point, it's pretty clear when you look at companies like GM, Hyundai, Kia, that Ford is pretty far behind. And we'll see if they're able to make up that ground with the universal EV platform. And I think they probably will be able to. But to say that that's an advantage, maybe. And it might not be an advantage at all. It might be everything that you're doing doesn't work at scale, and now you have to rethink it, and it takes longer. Maybe it all works out fine, but there's a lot of maybes in there. Is what I'm saying. All right, let's move into our next clip, which should be about autonomy, unless I labeled these wrong.
My other question was on autonomy. The company made the decision to shut down Argo about 3 years ago, given the time to market and returns considerations for robotaxi. But today, there's a number of robotaxis now on the road. A partial and fully autonomous technology is improving. So I'm hoping to better understand where Ford stands on level 3 and level 4 technology, and how important do you think partial or fully autonomous technology may be in driving the kind of recurring and more durable profits that the company is targeting? Thanks.
I see. Blue Cruise has done really well for us. The margins have held up. The pricing for level 2 and level 2 plus plus looks a lot more robust than a lot of the other ADAS features. So I think we're off to the races, and we will continue to over-the-air update improvements to Blue Cruise, lane change, ramp to ramp. We have a lot of opportunities to increase the ODD, and I think that profit and those margins will stay strong for a few years until it starts to commoditize. We are making a lot of progress on our level 3 system. The eyes, and that will be a major moment for the company. We really believe this is the key opportunity for retail customers. And we have the right team, all those Argo engineers who stayed at Ford. They've been really busy enhancing level 2 and building out a level 3. So stay tuned. I can't wait to show everyone. We are not going to be the first with a level 3 system at low speed, for example, that are out there today. We want a fully functioning level 3 high speed highway application with a really decent ODD where thousands, millions of customers would be able to use the system. On L4, we've been thinking a lot about our strategy after Argo. What looks very interesting to me is the service side of that. These are large fleets. They're going to need someone to adjust the instrumentation and repair those vehicles. And Ford Pro is a fantastic partner for fleet management of those large fleets. And they're no different than our transit vans. There are some differences, but we think we're really well positioned to take advantage of the very profitable parts and service, as well as offering level 4 to some of our commercial customers in a van format. And we'll have more news coming on that, but I suspect, but that's where we're really focusing on level 4.
Okay, a lot to unpack here. First of all, he said that they have level 2 plus plus. Not a thing. That is complete nonsense. There's no level 2 plus plus. There's level 2, but there's no level 2 plus plus. So you have level 2 autonomous driving. Don't be ashamed of it. It's actually quite impressive what level 2 can do. And this is one of the things, and I think I've talked about this in the past before. I think it's a mistake to try and skip over level 3 autonomy. If you're building a consumer product, if you're building a robotaxi service, I get why you'd skip over level 3, right? But for a consumer product, it just makes sense to include level 3 in your autonomous driving, repertoire. Like you gotta move past level 3 anyway, so you might as well give it to your customers. One, it makes an impressive demo if you have level 3 autonomy. 2, it's a necessary step that you gotta solve anyway. And 3, it shows that you're making progress versus making very vague promises about what is to come, but you're not quite there yet. Because even Tesla, other than the robotaxi, is still level 2. That's why they call it supervised. It's not level 3 supervised, it's just level 2. And this is pretty common for a few different companies to make these kind of outlandish claims. I don't know if they're outlandish. Make these inflated claims about autonomous driving. How do I want to say this? I've met with some people, some businesses that have said that they're going to have this great autonomous driving service in the past, and it hasn't happened. Just leave it at that. Like, some of these businesses are still around, some of them are not. Some of them were a part of a big automotive group, and now that's shut down. So there's just lots of different. There's a lot of problems that need to be solved for. And while you're on the way of solving all those problems, you might as well include level 3 in there, especially for consumers. I get it if you're trying to build a robotaxi type thing. That is not going to be the way to go, right? You're building it, purposely building it for to make money. But right now, as far as I know, Mercedes is the only one that has level 3, and it's under very specific circumstances that you can use it. And finally, in terms of why it's a good reason to not skip over level 3, it's a slow progression that helps the general public feel more comfortable about the technology. Now, as far as level 4 goes and Ford, it sounds like Ford is setting itself up for level 4 autonomy, but not for consumers, more for like commercial type settings. And it doesn't even sound like they want, and we'll hear more about this later, they want to have their own robo-taxis. It kind of sounds like they want to be the back end for it.
Tired of your car insurance rate going up even with a clean driving record? You're not alone. That's why there's Jerry, your proactive insurance assistant. Jerry compares rates side by side from over 50 top insurers and helps you switch with ease. Jerry even tracks market rates and alerts you when it's best to shop. No spam calls, no hidden fees. Drivers who save with Jerry could save over $1,300 a year. Switch with confidence, download the Jerry app, or visit jerry.ai/ACAST today.
All right, we have 2 more clips. The next one's going to be about tariffs, and our final clip will be about autonomy. So let's jump into the tariff question.
Our next question will come from Joseph Spack with UBS.
Thanks so much. Jim, I wanted to get your pulse on, I guess, A, what you're hearing, but maybe more importantly, B, what Ford wants in light of some of the tariff discussions have been happening and what might happen with Mexico as, Japan and Europe now got reduced tariffs. Because on the one hand, obviously lower tariffs are going to help you absolutely. On the other hand, it's a relative disadvantage for you versus maybe some of your competitors given your U.S. footprint. So maybe you could help us understand the range of outcomes on the USMCA negotiations that you're planning for. Should we think about a 15% rate or lower, or is it more nuanced than that given the U.S. content requirements? So I guess basically, like what is Ford really lobbying for in the conversations with the administration?
I think to put it simply, Ford, as the leading auto producer in the U.S. and the leading exporter with the most UAW workers, we're very clear with the administration. We want to simplify the tariffs so that we can make up for, that gap between the bilateral, import tariff rates and what we're paying in our tariff bill. Our tariff bill is $2 billion, and that's a net number. We see there's a lot of upside depending on how the negotiation goes with the administration. We're in daily contacts with them. And at this point, I would say they're very productive conversations. We'll give you more news when we get it. But we have a lot of opportunity, even as the most American company with a $2 billion liability. We have a lot of opportunity to simplify, especially parts tariffs, and reduce that liability considerably, which would be upside for the company. The reality is, our competitors now all have to pay 15% import and higher from Mexico. They can't change the footprint anytime soon. Those tariffs were not around a year ago. This is an opportunity for Ford. Yeah, it may be less than 25%, but I think we found with the administration they're really committed to companies like Ford, and they are going to work hard to reduce that liability.
All right. I don't want to continue to talk about tariffs. So I put this particular clip in here because I thought it was a good question and I thought it was a good answer. And it kind of gives us a better idea. Like, these CEOs can't just come out and say, I don't like tariffs. Like, on some level, they might like tariffs. Like, if we had Chinese auto manufacturers here in the United States, Ford might be all for tariffs on Chinese auto manufacturers because the Chinese auto manufacturers are building cars at such a low price that it would be difficult for Ford to compete. And you even heard Jim Farley say that they see their competition as being Chinese auto manufacturers. And you know what? He's right. I mean, he still has competition from GM and Stellantis and Tesla and Rivian and all those other things. But to discount the Chinese auto manufacturers, I think you do that at your peril. So I think, using them as a benchmark of how you're going to expand your automotive empire, I think that's Chinese auto manufacturers have been very successful at it. They also received, a bunch of different subsidies and help from the Chinese government. But yeah, I guess I do have more to say on tariffs than I thought I did. In general, though, I don't think, getting back to my main point, which obviously I'm rambling, but getting back to my main point, I don't think auto or just manufacturers in general are super thrilled about the tariffs because it's making their products cost more. If they're going to absorb some of that cost, that would mean that they're eating into their profits. And, they would probably rather not do that. Ford made $50 billion this quarter, $2 billion about for the year will be paid out in tariffs. That's not a huge, you add all of that up for the year, that's not all that bad in terms of tariffs, but they would rather pay no million or no $1 billion in tariffs if they can get away with it. All right, like I said, our final clip is on autonomy, so let's go ahead and listen to that. And I actually think this is a good question.
Switching gears, I wanted to come back to a comment, Jim, earlier on autonomy. I think you mentioned that you could do some something on the Ford Pro side providing service. I'm curious what that would kind of maybe look like. Would you go to like a certain and partner up with someone? And does that kind of rule out any interest in actually producing some sort of integrated autonomous vehicle?
It's early days. I mean, we're in the first inning of this rolling out. It is very exciting for me to be in the industry in 40 years and see all these autonomous robo-taxis. But, the technology is fascinating. But as far as making money off the business, which we have to bet on our capital as leaders of the company, we think that, if these robo-taxi fleets are large fleets, I'm not sure it's going to be a super profitable business, but someone's going to make money on owning those fleets and maintaining those fleets. And, this is a very congruous capability versus our service build out for Pro. We have nothing to announce today, but this is quite intriguing for us as a company. We really feel like the fleet management opportunity is a big upside for Ford Pro. We're doing it digitally today. Part of those softwares that we sell that Andrew mentioned, that's growing at 24%, is fleet management software. It's very popular. Going into the physical fleet management is a different thing. It takes capital. It will require leasing and a lot of other, more capital intensive investments. So we have to be, thoughtful about that. But we are very intrigued about these robotaxi fleets, what they could mean for Pro and our dealers over time. Again, nothing to announce today, but I think you've heard what we said pretty clearly.
I agree. I don't think robo-taxis as a business venture is going to be super profitable. Now, when you say super profitable, that means different things to different people, right? It means something very different to me than it does to Ford as a multi-billion-dollar company. But I don't think it's going to be a business that most big companies are going to want to get into unless they're using it as a funnel to something else. I think it's too much of a headache. You got to manage the cars. You got to, which is, the fleet, both digitally and physically. And you got to deal with repairs and new tires and somebody threw up in the car and all this other stuff. And on top of that, you have to keep the fares at a range that people are willing to pay. Now, I would imagine that robotaxi services in the beginning, just like Lyft and Uber, will heavily subsidize each ride. But eventually, I don't think they're going to continue doing that for long, and they're going to raise the prices to what they can get away with, whether that's 50 cents a ride or a mile, or $1 a mile, whatever they think they can get away with is what they're going to raise the prices to. So I think robotaxi services are a great thing. Don't get me wrong. If you want to keep it affordable for people to ride, I just don't see it being very popular. If you don't mind raising the prices, just below what people find tenable, then sure, it'll probably be an okay business. All right, everybody, that is it for me. I hope everybody enjoyed this episode. If you want to email me, it's Bodie, BODIE at 918digital.com. You can also find me on X at 918digital. If you want to connect with me on LinkedIn, I'm on there as well. Just look for Bodie Grimm, bald, kind of ugly, hideous guy with a black shirt. That'll be me. And I hope you all have a wonderful weekend. Next week we'll be back to 2 episodes. I've been very productive. I'm not even going to say creative because maybe these episodes aren't so great, but I've been very productive recently, and it's like sometimes creating content is a struggle and sometimes it's super easy. And right now it's super easy. So we'll see how long this lasts. I was actually telling my co-host on Beyond the Post, Rob Dunwood, today, that I was like, man, I am on fire. And he just said, well, enjoy it while it lasts, because it's probably not going to last for very much longer. And that's true. That's the way it goes for creating content. All right, everybody. Thank you so much for listening. Again, I hope you all have a wonderful weekend, and I will talk to you on Tuesday.
This concludes the Ford Motor Company second quarter 2025 earnings conference call. Thank you for your participation. You may now disconnect.